The transportation we take for granted. Jon Langenfeld joins us from Robert Baird and Company. Good noon to you, sir.
Good afternoon. Thanks for having me.
You're at a cocktail party. What's a single thing you hear people get wrong about trucking? What's a thing that we just take for granted every day?
Well, I think it comes down to the fact that it's not one industry. There are lots of different subsets of the industry. We've seen trends very strong in certain areas, certain commodities, certain geographies, and other areas they're still struggling. So it's, there are a lot of different moving pieces in the industry.
Bring up too much information here, Elliot, if you would. We'll bring up the idea here of truck miles, rail tonnage. These are all great statistics. There it is. Trucks recovering from a crisis. We're trying to bring that up. Right there it is. Trucks recover from a crisis. For higher truck tonnage. I was taken by this, John. It looks like we're really back from the slowdown. Is trucking back from the slowdown?
Well, it's not. In fact, if you look at domestic transportation, we're still probably 10% below where we peaked out back in 07. But what's happened is you've seen a flush out of capacity because companies haven't been buying trucks. We're starting to see some recovery there, but the supply-demand dynamics are actually fairly favorable for the industry. So pricing is moving higher, and the healthy companies that have remained are in a much better spot today.
Well, let's bring up a challenge here, and I want to go on to rail here in a minute, John, but the idea of trucking, and you mentioned Arkansas Best. First of all, tell us about Arkansas Best. Who are they?
Well, they're a less-than-truckload company, so they move pallets of freight from shippers. In the less-than-truckload industry, you're dealing with a consolidation of numerous shippers onto a given truck. There's a heavy industrial backdrop that goes into the LTL shipping versus full truckload shipping, which has more consumer and retail-type products. And
there's a chart rolling over, and you say they've been beset by an ineffective pricing strategy. I'm intrigued by that because so much of the instability and uncertainty of inflation or commodity prices is you got to get your pricing right. Tell us what we can learn from the pricing strategy of Arkansas Best.
Well, it's been one that's been a little bit more volatile than we would have anticipated, and I would say it's much more the exception than the rule, and probably see things improve as we move out from here. But I think in general, in the asset-heavy business, if you don't get a fair return, you cannot grow your fleet. And so we've seen that over the last 4 years. We've seen 15–20% of the capacity move out of the industry. Shippers are going to have to pay more. Ultimately, that's going to end up in the consumer's lap. But I will tell you, this industry is not a healthy industry yet. It's moving towards a healthy industry, but it's not a healthy industry here because the returns on capital are not sufficient.
Where you buy, hold, sell on Arkansas Best?
Well, we're still a hold on this stock. I think it's interesting as it pulls back here simply because, look, they do move a lot of freight. They're still one of the top providers out there. And we do know the underlying industry fundamentals in terms of LTL freight and pricing, they are improving.
Let's do an elegant chart here, folks, and switch to rail with Jon Langenfeld and Robert Baird. The resurrection of Northern Southern. I love this. Warren Buffett goes out and buys a railroad, and, you know, there's a Canadian this and the Canadian that. Tell us about this venerable name. What's Norfolk Southern doing?
Well, I think the industry, the specifics of the industry that make it so compelling is that you have huge barriers to entry. There are only 2 railroads in the east, 2 in the west, and then you have the 2 Canadian that really make up the vast majority of rail freight. So huge barrier to entry. You have great pricing stories underneath these stocks, and then you have what we think are very reasonable valuations. So Norfolk Southern specifically, they're one of those rails in the east. They've done a tremendous job of digesting the volumes coming back to this industry. We were at a point where volumes were down 20–25% from peak volumes, and yet margins have continued to move higher in the industry. And now you have the added element of intermodal rail, which takes volume off the road and moves it onto the rail. Plus you have export coal, which has picked up significantly here over the last 6 months, given some of the global crisis out there.
It's time for Dumb Question of the Week. John, is there a shortage? Is there a shortage of rail cars out there?
On certain lanes, I would say, certain types of commodity, the coal export business, as an example, has just surged, and we're on pace for record coal export this year. That's going to be tight. But in general, if you look across the rails, here, there's another industry where volumes are still off more than 10% from where they peaked out back in 2007. So there's still some excess capacity in here.
What's the single best buy right now? If you're sitting with me today and you say you need to buy this in transportation, what is it?
We like models, high barrier to entry, reasonable valuations that have pricing stories. So you think of a company like a FedEx as an example. On the integrator side, the UPS-FedEx combination. On the rail side, we like Union Pacific for the same reasons. Good high barrier to entry, good pricing, and the story should play out well here as we move forward.
Did Mr. Buffett make the right move buying a railroad?
Yeah, absolutely. I mean, these models still have a long way to go in terms of improving their returns on capital and margin. They're still cyclical businesses, so we need to be wary of that. But they have a long ways in front of them to go in terms of both revenue as well as margin.
I mean, you think about it. Craig Moffett on earlier. It's Facebook this and Apple this, and there's like this boring, basic business, and as that chart showed earlier, boy, have they done well versus the Dow Jones Industrial Average. Do you just assume this continues for another decade, or do you worry about this being their decade and the next one, transportation, may not be so?
Well, the decade of the 2000s was definitely the premium platinum era for the rails, because they've gone from a business that no one wanted to invest in them. They didn't even want to invest in themselves, to now one where everyone would like to invest in them because the fundamentals are so attractive. So, this decade can maybe be the gold decade for the rails. Still a lot of upside here. Still a cyclical investment, but you look at pricing, you look at the fact that they can't be replaced. They are the most efficient hauler of freight in the U.S., and nothing's going to replace that. They look like pretty good business models.
Very good, John. We'll leave it there. Jon Langenfeld, Robert Baird and company on what we should have bought 5 or 6 years ago with some enthusiasm.